Welcome back, grade 12 accounting students. If you've just joined us, we're busy looking at some year-end adjustments, common errors that students make. Once again, thank you so much to our sponsors, Liberty. Guys, please remember our tenfold education app. If you haven't downloaded this app, what are you waiting for? Remember, it's going to assist you with your revision. Also, do check out our awesome videos on YouTube at Mindset Learn. Okay, right, so let's now continue. Year-end adjustments, some common errors that we pick up when we're marking your papers. Now, the very first error that I'm going to focus on, and you're going to probably think, Mahesh, why? Why are you focusing on this? Because this is something that we know. We've been doing this from grade 10. However, remember grade 12, what I spoke about earlier on? This is what we pick up when we are marking your papers at the end of the year. We still find students making an error with consumable stores. This first error that I'm going to talk about. Right, so consumable stores, stationery packing material versus consumable stores on hand. Okay, so what do I want to highlight? There is a difference between what was used in the financial year, in other words, the expense, and what is on hand, left over, not used, the asset. Okay, so for example, an expense, right? So remember, an expense refers to what was used in the financial year. So I want you to imagine, right, packing material. Let's use packing material as an example. During the course of the year, I purchased 20,000 Rand worth of packing material. So for the year, this is what I've bought, 20,000 Rand packing material. Now, obviously, each month, packing material in my ledger account, I would record whatever I've purchased, and at the end of the year, the total that I've bought is 20,000. Now, this is where at the end of the year comes in your year-end adjustment. So from that 20,000, I now need to establish from a stock count what was used and what was left over. So for example, I've used 19,000 Rand worth of packing material. So I've actually used it, and in the storeroom or in the shop, there is 1,000 left over. So 19,000 is what was used and 1,000 not used. Okay, right, with me. Now remember, grade 12s, whatever we end up using is what we consider as the expense, okay? Whatever we have not used is the asset, right? What we've used, the expense, what we've not used is the asset. So from this ledger account, the 19,000 belongs in my statement of comprehensive income or the income statement. And the 1,000 is what I show in the statement of financial position or the balance sheet. Okay, right, so what do we find students doing? We often find them mixing the two. So instead of showing us 1,000 Rand in the balance sheet, they show that in the income statement, and the 19,000, they show this in the inventory note in the balance sheet. And obviously, that is incorrect. Okay, so to illustrate this further, let's now do a proper example, and then you know exactly what I'm referring to. Okay, so I'm just giving you an extract from a pre-adjustment trial balance on the 28th of Feb 2023. So here I've got stationery, so this is what we've bought for the year, right, an amount of 5,600, and then I've got packing material 6,700, again whatever we've purchased or we've bought for the year. Right, then I have my year-end adjustment, which I think is on the next page. Let's just go to that. Okay, so there we go, the year-end adjustment. On the 26th of February, stationery costing 300 Rand was purchased on credit but not yet recorded. An inventory count on the 28th of Feb revealed 500 Rand stationery on hand. Okay. Right, so here we've complicated it a bit. We're not just giving you how much of stationery is left over, but we're now telling you we also purchased stationery for 300 Rand. So let's deal with this 300 Rand first. Right, so if I go to my pre-adjustment trial balance, let's just get that amount quickly. So stationery that I've purchased thus far, 5,600, so that would be our starting point. Right, so 5,600 is what I've bought so far, right? Then I've got an adjustment telling me I also purchased additional stationery for 300 Rand on credit, but it was not yet recorded. So I've got to first take this into account. So in my income statement, I'm first adding the additional purchase of 300 Rand, or those students that like to first do the calculations using a ledger account, right, stationery. So 5,600, I now purchased a further 300. So my total purchase is an amount of 5,900. That's what I've purchased in total. Okay, right. I'm now told at the end of the year, I did a stock count, inventory count, and there's 500 Rand stationery on hand. So what does that mean? 500 Rand is what is left over. So that becomes my asset, my consumables on hand, right? Which means the balance would be the expense. Okay, right. So how do I now show this in my income statement? Don't think I really drew up the income statement there because that's not necessary. Right, so let's continue with this. So let's assume I'm now busy with my income statement or statement of financial position. Right, the handwriting there not too good, but I'm sure you guys are following. So obviously here under operating expenses, I have stationery. So I've started with 5,600 plus 300 minus the 500 that was on hand. And in the amount column, I'm obviously recording. Let's just quickly get my calculator out just to make sure I don't make a mistake. So 5,900 minus 500, and my expense is 5,400. So 5,400 is the expense, right? Because that is what I've used. And when I'm drawing up the inventory note for the balance sheet, for the statement of comprehensive income, this is where I'm now showing consumables or consumable stores on hand. I like to just call it consumables on hand, and leftover stationery that I have is an amount of 500. Okay, right, so remember, in your inventory, you are showing the asset, right? And in the income statement, you are obviously showing what is the expense. Okay, right, so let's now move on. Let's now look at the second adjustment where it's the same concept being tested, but how the calculation now is different. Packing material used during the financial year amounted to 6,200. Okay, so now how is this different, guys? They are no longer telling you according to a stock take, this is the packing material on hand. Instead, they are now giving you the expense. This is what was used for the year. Okay, so when we now drawing up our income statement, right, packing material, okay, so if I did bring down an opening balance, let's just quickly go back. So packing material, that pre-adjustment trial balance, it's sitting at 6,700. So I just want to bring that down, right? 6,700 is what I purchased during the year, right? But what did I use? In other words, what's my expense? It is an amount of 6,200. Can you see the difference, right? I'm given what I was used, or what I used, sorry, and on hand is 500 that I'm now showing in the inventory note. So in inventory, I'm not going to redraw this note, but here, let's just quickly fix this. I'm just going to remove the brackets there, right? So on hand, inventory, right? Leftover packing material, I've got 500. Okay, so remember the first 500 was stationery on hand. The second 500 is packing material that is on hand. Okay, so clearly you should see the difference. Okay, right, now another adjustment that I want to quickly highlight. And this adjustment, you probably see it in every exam, okay? And I promise you guys, whoever's marking your script, right? Remember, we want to give you the marks. But what really hurts us, and it does, because even though when we're marking, we're not quite sure whose scripts we're marking, you know, when we see these errors that are made, it hurts us as accounting teachers. Right, so which one am I referring to now? I'm referring to insurance, the insurance adjustment. So here, yes, it's the prepaid expense adjustment, but what do we see? We see students counting, when they're counting the number of months, they count the number of months insurance was prepaid incorrectly. Okay, so what I'm going to do is I'm going to go straight to the example to illustrate exactly what I'm talking about, but I'm sure again your accounting teacher may have already highlighted this common error that students sometimes make, right? Remember, each error, guys, is costing you, okay? So the more you take note of these errors, the better it is for that final exam. Right, so let's now move on to that error. Okay, so there we go. Right, so obviously it's dealing with insurance. It's the same financial year that I'm looking at. So I'm going to quickly plot my financial year. Right, financial year ends on the 28th of Feb. Just want to see that you guys can see this. Yes, you can. 2023. And the financial year began on the 1st of March 2022. Right, so as usual, you'll get a pre-adjustment trial balance. Before adjustments at the end of the year, my insurance is sitting at 12,900. So obviously that's always your starting point. Additional information, the year-end adjustment included in insurance is an amount of 1,200 Rand paid on the 30th of September towards an annual premium. Okay, right, so let's look at the calculation, and that's what I want to focus on. Again, you guys know how to do the calculation, but this is where you go wrong in terms of the number of months. Okay, so on my timeline, watch what I'm doing. So I'm looking at when was this insurance paid, right? On the 30th of September. So on my timeline, I'm plotting the 30th of September, okay? So it's somewhere in between, and it's an annual premium. Now just be very careful here. Annual, obviously 12 months, but sometimes they might use the term biannual, right? So when they do this, obviously they're looking at half the year, 6 months. So make sure you read. Okay, in accounting, guys, please remember, it's still, you know, the tips that your English teacher gives you for comprehension applies to accounting as well. You've got to read. You've got to make sure you read your transactions. Don't just skim through it because you're trying to save on time. There's enough time, right? Don't panic, there is enough time, but make sure you read. Read properly, take your highlighter, take your pen, and just exactly what I'm doing. 30th of September, annual premium. Okay, right, so I've got an annual premium that was paid, and remember that amount is included in the 12,900, I've got to now adjust this amount. Right, so 30th of September annual premium. So remember, it began 30th of September, right? So obviously I'm paying from the 1st of October, right? All the way through until, so if we look at 12 months, so I'm just going to quickly, let me just quickly simplify this. So I'm going to just change the date just to make sure. 1st of October, let's do that, right? Paid on the 1st of October, and obviously all the way through 12 months later should be the 30th of September. Just want to quickly fix that, right? And I want to make that the 1st of October. Okay, so 1st of October, right? And it's paid all the way until the 30th of September, there we go, 2023. Okay, so paid on the 1st of October 2022 for 12 months until the 30th of September. Right, now in terms of GARP, obviously anything that falls outside the 28th of Feb must now be subtracted, and most of us know this, but let's focus, where is the error? So when I'm now adjusting, right, obviously the month of March, April, May, June, July, August, September, right? So I'm looking at 1, 2, 3, 4, 5, 6, 7 months. I'm looking at 7 months, and I now need to adjust. Okay, now guys, you know, not often, all the time, when I'm teaching accounting, I do use my fingers, right? Just to quickly check, right? So we're looking at the month of March, April, May, June, July, August, including September, 7 months. Okay, right, so I'm adjusting for 7 months. Now, what's the error that we find students doing? Is they don't look at the date, 30th of September, 1st of October, right? And sometimes they leave out a month, all because they are rushing and they're not reading carefully. So I want you guys, please remember, draw this on your exam paper. And again, you're not wasting time by doing this. You want to be as accurate as possible, and you want to avoid these errors. Okay, right, so with this adjustment, 1,200 divided by 12 to get my monthly premium times 7. Okay, you guys got that. Right, so 1,200 divided by 12 should be 100. So 1,200 divided by 12, and then obviously times 7, and my adjustment is 700. So there we go, adjustment, an amount of 700. Okay, right, what am I now doing with this adjustment? Now this is the easy part. In my statement of comprehensive income, I'm starting with 12,900, and please remember minus 700, because obviously it falls outside that financial year and you've got to subtract. Okay, so minus 700, and obviously prepaid expense, trade and other receivables. Okay, but that you know, but this is what I needed to highlight, the months that sometimes students leave out. Okay, right, let's move on. Okay. So the next section that I'm looking at, so I think I've done enough of the income statement, the balance sheet. Let's now focus on another section, the cash flow statement, and some of the common errors that we do pick up. So here, I think before we get started, let's take another break, go and grab that glass of water, and then when we return, we will focus on cash flows. See you guys in a bit.